Under pressure. What would you know about pressure? HFR from the floor. Miss Trade Matt Davio from the office. Yes, I got it, G. We're streaming and Zoom is watching, and Lee has entered. Lee has entered the building. Matt, saw a great version of that David Bowie classic. Somebody shared in my timeline somewhere. It really is crazily. It's a crazy world, and I'm gonna share a few things here because logic has left the building, and it's very hard to dissect. Though there are a few things. It's like in the ER, Matt. We on the way in we say the levels you need to triage the market. Not only the levels, but what are you paying attention to? So when you come into the ER, they're going to check your blood pressure, your pulse, your oxygen levels. I mean, there's a few things that they got to know right away. Right?
Oh, and your COVID
vaccine status. Yes, of course.
Yeah.
Because they got to know that. And we're going to get to that because I got a few beautifuls for that. But first, Matt, let me just start by saying I'm going to I got to bring this back out because it was so good when it happened.
I'm going to say this before you do that. Happy anniversary to Black Monday, 35th anniversary.
Yeah. I was there on the floor. Matt, this is breaking news.
35 years. You were there 35 years ago. God, you're old.
Yeah, I know. Breaking news from Cosmopolitan. This is actually not breaking news. This is old news because they said this over a year ago, maybe 2 years ago now. This is healthy. All right, Matt, let's follow my logic. All right, because if this is healthy, the New York Post reporting air pollution is making women fat, a new study found. So if we do some logic here, then air pollution is healthy. Prove me wrong on the thought process,
right? Because according to a few magazines,
well, I mean, if fat is healthy and air pollution is causing women to be fat,
if Lizzo's healthy, then she must be sucking on a lot of tailpipes.
Breaking news:
tailpipes. Lizzo.
This is still healthy. I don't know. I don't know where to go with that other than this. Then Chuck Calesto. He shares breaking report. Moderna's CEO now admits only the vulnerable need a COVID booster and likens the virus to the flu. All right, so this is the CEO of the company that invented mRNA injections, and now the CDC is voting in about an hour or so.
Jam it down every kid's neck.
Yes, when the inventor of it says it's only needed for people over 50. And that are at risk. They got to be over 50 and at risk, not under 12 with no risk. And that brings me to this, Matt. We love Venn diagrams and pyramids, but this is the pyramid of intellect. And the very top of it, you and me, Matt, people who never took the COVID vaccine, even after all the social pressure, PhDs, master degree, bachelor's,
Bob, hold on. I actually, I see myself as somebody who am healthy, didn't need to take the vaccine, and I've avoided such drama. So I actually identify as somebody who is fully vaccinated.
Yes. Well, now even Harvard is saying, and if you want to come on campus, you're going to probably have to get boosted. Even though the CEO of Moderna, who invented it, said you don't. I mean, it doesn't
That's
what I mean. It's crazy. The world.
And why are hospitals still taking a COVID test before you go in for any surgery? Yet they're not testing STDs or AIDS or any of these other seriously, who gives a shit? Like, are they still being paid? That's my question. Are hospitals still being paid to swab your nose? Because
they have to be.
Because that's the only reason you would give somebody a COVID test before a orthopedic surgery. My God. I mean, stop, please.
All right, Matt, back to the ER. The one thing that we both agree on is the only place that the story is really being told accurately is the interest rate complex.
Yeah.
We know that the 10s almost went over the 30s, almost inverted there, which is a death cross along with the Phillies winning the MLB title. Man, I saw today that the 3-month is 4 points. The 3-month bill, you're going to get 4% on. Like,
Yeah, not bad.
Let's look at the bonds though, because they are telling us a story that is not evident in the equity indexes at all.
Well, it's not that it's not evident. It's just they're crashing every day. They're making new lows. I mean, today on the ZB, we're down to 129 basically, and 129.04. And again, you look at a chart like this, it's like, okay, where do you start? Where did you, like, where were the opportunities to sell? Like, looking back, this is the other thing. This is the thing that we kind of, you and I try to point out, like with the equities, we haven't even had this type of action in the equities yet, where they're just selling every day. And basically that's all they're doing here. I mean, we've been below value now, since, I don't know, when did we crack here? This was April. So for 6 months, we've just been selling off slowly and steadily. We had one little jag up here to 161, and that was back in August. So you went from, that turn from 146 to 161, which is a big move, 10% move. But since then, I mean, the next shoot, as you will, in the chutes and ladders, this shoot has been straight down 161 to 128. I mean, that is huge, because that kind of mirrors the 205 to the high here, which was 45 points. So we're almost there again. Another 40 points from here gets you down to about 120. And if you'll recall, the big number still on the weekly chart for me is like 114. 114 takes you into point of control balance for the life of this contract, traded back to, this is the UB, but if we were to bring the,
right.
Let me bring the ZB in real quick. But again, the fact that this is making new lows almost every day should be of concern to you. And this one is a leveraged product that just came out in 2010. So it's 2 times the ZB pretty much. And the ZB today is down another buck to 122.04, which is again a fresh new high. And if you look at that weekly, we've been saying from day one, 111, 114 is the point of control. We're not far. I mean, I said this at 140. I said at 140, we're not far. Now we're at 120.
Yeah.
So you start, and this is a monthly chart, Bob. I mean, look at this. Look at the monthly bars on this. These aren't small little moves either. Wham, wham, wham. That little recover here, and then wham, wham. The last 3 months have just been straight down. That's a month. These are monthly candles. So you start looking at this, and again, something is and again, just the last couple of days, having nothing to do with the market. My gut is telling me something's coming soon. Something's coming really fast and hard. I don't know what it is. And you even see it today. The SPOOs tried to, they were up overnight on the Netflix news, and then they just started selling off again right around the European Open, and they've been selling off all day. So once again, we're back at the lows of the day. The SPOOs are down to 36.95. They went all the way down here to 36.90, down 40 points. Now, as I speak, the bonds have reversed since we started the show. So it's violent out there, and there's a battle going on. Let me just show that real quick, because that's interesting. Like the bonds right here, they just kind of maybe made a double bottom here at 129. I don't know. Now they're 129.17. They're whipping all over. The SPOOs are down here in the low. The Russell, the NASDAQ, everything's at the lows here, Bob. It's a scary, weird market. And it's the middle of the day. This is the slow time of the day. This is when things should be slow, right?
Yeah. Sure, they should be. All right, man, I wanted to share this just to highlight, because we've been, part of our narrative has been COVID lows. Everything will revisit COVID lows. And another part of our narrative has been, there hasn't been incredibly bad news yet. I mean, other than the inflation data. But this one for sure, shared by Liz Ann Saunders, a prospective buyers traffic component within the builder sentiment index that came out today, continues to plunge, and it's at a rate only seen during COVID-induced recession. I mean, it's lower than the 08. Like, there was more people looking for houses in the financial crisis of 08, 9, 10, 11, 12 than there are now. So this is a giant warning sign here. Nobody is showing up for your showing. Nobody. Prospective buyers are there aren't any prospective buyers.
Well, except in Bend, where it's a miracle place. Everything is just.
Well, I mean, Bend, honestly, and I've said this, with the biggest part of the population retiring, there's a giant number of them that don't want to go to Florida or Arizona, right? And it's not a big community. It's not like it's a several million people community. And so if you get a little bit more traffic here from the biggest demographic that retires is a giant number for this town.
Yeah, but the prices aren't exactly.
Well, I mean, there's a lot of people retiring with a lot of.
They aren't retirement friendly, Bobby. But okay, I hear you.
Well, something has to explain it. That's my jump off point for explaining it. Anyway, Matt, look at anything you want in the real estate sector. We go so far and wide on this sector. We could go from REITs to Home Depot to lumber. Anywhere that you would like to.
Well, I'll just bring up
all going to get affected by this.
The overall IYR, which is the all U.S. shares ETF, so it's commercial and overall. Just to show that we did hit a low here, 75.68. We're at 78.69, down $2 today. So it bounced to that red line there at 81. Now seems to be continuing the trend, which is lower. So. That continues to play out that way. If you just want to look at the XHB, which encapsulates just the public builders in the U.S. market, again, made a low here just back in June at 51. Higher lows here, so not as strong of a downside here. But again, you got to watch that level. 50 goes. Again, you just start looking at these on the longer term charts, the monthly, etc. I mean, these have the COVID lows down here at 23.92 on the XHB.
Thank you.
So,
thank you.
I mean, why wouldn't we test that, which is another half off from here? And then if you look at the REIT index, which again is just another index of the REITs, and that was the longer term chart. But this daily chart kind of tells the picture again. All just dragging on the bottom, Trying to, again, it's technically oversold, but that doesn't mean you can't just keep selling. Look at the bonds. Like, this is my point. They just sell off every day, and there's really no reason. It's just there's no buyers. So guess what? There is no buyers in housing. There's still a ton of realtors, so they're still holding on. I think that's what keeps it up. Is that like we're seriously at this juncture where we're at max realtors in the country. We are, and I don't have those numbers in front of me. But if you went to the Realtor Association, you would find out that is the truth. We're at the max we've probably seen all time. So all those people are hanging on the ledge going, oh, just come buy. I got plenty of product. It's less product than it used to be, right? It's all the spin. Still a great time to buy. Maybe not. And then lumber, since you brought it up, again, just, made a new low here at 397, did dip below there at the end of September and has been rallying. So just here dragging along, chum on the bottom, as I like to say. Chum on the bottom is all it is.
Right on. Matt, let me share this next thought about the market. And you shared this in the network. All or nothing days are really starting to pile up. 2022 is now on pace to be tied with 2010 for the third most in a year on record. We got a lot of year left. And
what that means is what, that everything is either up big on the day or down big. And that's what we've talked about. It's like today we're actually kind of we're down from where we were overnight, but we're really not up or down big. So it's kind of a strange day for me. I'm watching it.
A lot of day left too. Also, let's just keep that in mind.
Yeah. Well, I mean, anyway, the SPOOs have made new lows for the day, but the rest of the market, the Nasdaq has not. I don't know. It's a scattered market. I don't know what to make of it, Bobby. I really don't know what to make of it.
Again, under pressure. Matt, this was shared by Endless Capital, and he says Tesla reports tonight, and here is your reminder that it traded sub 5x sales from mid 2016 to Feb 2020 before its major growth ramp, and the Fed put in 40% of the money that's ever been printed into the market. While currently it is trading at 10x sales with growth slowing, market share falling in a bear market. But what I want to point out is EB Miller. He says Tesla's down 33% in 3 weeks. If you are still short here, you are mildly retarded. Thank you, EB Miller. But again, just because it's down 33%, we talked about Tesla a lot. There's no reason. Why is 30?
If you've been short since like 15, or rather, 400. I mean, buy some calls. It's really not that hard to hold them. You can buy some calls into the event, and you're still up 50%. So I don't know. Yes, if you're talking just the last 3 weeks, for sure, take the profit. But it depends on when you entered the position and how long you've been short the position. And there's a lot of ways to protect your said position if you are short. So buy some calls.
I think the spirit of his tweet, though, is that 33% down in 3 weeks is a magic number, and you're retarded if you think it could go any further, which is absolutely ridiculous thought process. Also, for sure, we pound the drum. Please take profits. Take profits. Always ring the register. You got to be ringing. But the thought that something, and bring up Tesla. Let's just talk about it, because there's plenty of room for this thing to continue to come back to reality. And I don't see why his 33% remark.
Well, before I do that, I'm going to cover Netflix, which had great earnings. So this bottom back in May at 164, been dragging along like chum on the bottoms, been creeping up. Now, I mean, look at this lovely chart, right? So many gaps in this thing, I wouldn't want to trade it. And so therefore I'm not trading. Gap here, gap here, gap here now, gaps all over the place. That is a sign of like arguments going on at certain levels is what it is, Bob. But this again is a daily chart. And again, you look at a monthly chart, you're like, well, those gaps start to on the monthly don't really show up as cleanly. They only show up on the daily. So now on the monthly, all right, yeah, again, if it could trade, I guess, back up to 450, but that's going to be a double from here. And I see it kind of running out of steam again here at about 300. But there's nothing on this monthly chart that says it's bullish, but it's bullish at $20. So that's Netflix. So now let's look at Tesla. Let's just look at Tesla because it's coming up. We got the earnings, and this has been up again the last few days already. So
you're still on a monthly if that's Tesla.
It hasn't brought up yet. So this is a daily chart. 219 is where it trades. Got down to about 200, and that was the low down there around 200. And again, 204 I think is where it got to. But I don't know. I would rather just wait for the earnings. If you're not involved, fine. Sell. Give me 300 to sell again. I'll sell it again. I mean, the market cap is still $690 billion. I mean, again, financials don't matter in this company. It just trades the way it trades. But there's nothing bearish or excuse me, there's nothing really uber bullish about this chart unless it got over 300 and started taking out these previous highs. So I don't see that really happening at this point, Bob. And if you want to know what the COVID low is on this piece of turd, I mean, again, look at the longer term picture and you're like, wow, if 200 goes, this thing could go again. COVID low is 2380. We're still 10x. We're still 10x where this thing was in the COVID low.
Again, back to my point here. Thank you, EB, for your thought that 33% off is so by his metric, you're retarded if you don't buy it. Like I'm just saying, be careful with thinking the market should do something based on anything other than the most pain delivered. I think that's something that we need to keep reminding people.
Oh, and by the way, since we started talking and the bonds are reversed, new lows again in the bonds. So if you don't think I'm kidding about like how crazy somebody wants to get out here because something's coming, I keep saying this, and now you've just made new lows across the board. The NASDAQ just joined for the low of the day, just cracked here again during lunch. When I see that happen during lunch, when you've taken out the day's lows during lunch, that's a warning sign. Like you said, there's a lot of time left in this day. There's a lot of time left in this Wednesday, and there's still a lot of time left in this week, Thursday, Friday. So all this talk of rallies and nonstop blah blah blah. I mean, it's
and we haven't even got into the nuclear scare yet. Thursday, Friday. The nuclear narrative is always Thursday, Friday.
right.
Rita's
So-
gone nuclear here. And by the way, if you get a dog the size of the dog that you're about to fucking sink your teeth into, I will say that is one of the greatest. Right, Rita? Rita agrees. Rita does it.
Rita loves it.
Rita is like, you are out of your mind. Out of your mind. Anyway, that's a story for another. Hey, you know what? Let's look at Chewy, Matt. Then, since you're thinking about getting a dog, let's look at Chewy. That's how we roll here. Matt's thinking about, listen how crazy this is. Matt is thinking about an Anatolian Shepherd, Great Pyrenees.
Pyrenees
Yeah.
Shepherd mix. Yeah.
I mean, I guess for home invasion, it's as good as a sawed-off shotgun.
Yeah.
Because that dog will kill anything that
Yeah.
comes into the house.
Well, but super friendly though. Super friendly.
Okay.
dare
Until
you.
it's not, and it's
I dare you.
140 pounds.
Right.
Chewy, bring it up. Let's talk Chewy.
All right. Didn't I bring it up already?
You sure didn't.
All right, Chewy, we haven't looked at it in a while. Had a little rally to 51. I said sell it, bam, bam, down, back down, and now we're kind of dragging on the bottom here. I don't see much to show you except for it's dragging on the bottom. 22 was the low back in June and rallied all the way to 51. Just chunking along here. Just chunking
And
along.
what's the COVID low for Chewy? Let me chew on that.
I don't know if it was around, honestly. It just came out. So March of 20, right here, we tagged it, 22, already tagged it.
All right.
So, but again, new issue, the stock's only been trading for, 3 years.
Doesn't pay a dividend?
No, they don't make money. And
How
it's
could they
still
not
worth
make money?
$14.5 billion. It's a lot.
More than GM. What is
Yeah.
GM?
GM. I don't think it's more than
I mean, I think it's interesting too, again, with the Tesla, how insane that market cap is.
GM is not more. It's 50 billion. So GM.
Yeah, but still, so Tesla's 10x GM.
Oh yeah. 15x. Yes.
Again, back to the tweet here, 33% lower, maybe not all that significant compared to where it's at a valuation standpoint. I don't know. Food for thought. Matt, we started with pollution and Cosmo, and if A is true and B is true, A equals B, I get that. But if A and B can't be true at the same time, that's the world that we live in. And it's amazing on how many things that seems to be resonating with. A and B cannot be the same or cannot both be true, yet we live in a world where people live that reality and preach that reality. It's unbelievable.
Right.
I don't know where to go with that, but
I don't know either.
all right, Matt, your Yankees, you called that the Yankees would mop up. Now we got the San Diego Phillies, which would seem to be the most important thing in the universe going forward.
Well, and the Padres, what a game last night. The pitching duel by both pitchers was pretty astounding. And Padres, that Wheeler just threw a heck of a game. One hitter down in Petco just shut the crowd right out. And the Phillies again looking to be the recession bringer. Right. If they win, every time they've won the last two times, we've had a major recession, 98 and 2008. So I guess we've had to wait 14 years. That's why the Phillies are leading this series to start, I guess. Be careful what you wish for, Phillies fans.
All right. Anything else you got? Jumping out at you?
Well, I just got a market that's breaking down and middle of the day, and I don't know what to think of it. Honestly, that's
3680 now, spoos. This is just not the follow through the Bulls were looking for.
No,
for sure.
And the only, and really, Bob, the thing that's interesting about watching it is the only really rally that we've had this week has been overnight. So it's really hard for me to get really super excited when we haven't even had really a trend day one day this week to the upside. So let me show you what I mean here. And this should cause you pause. Like somebody is in there buying overnight only. And then when the market opens, there's no buyers. So this happened Monday. We opened up basically at the high of the day, and this is the SPOOs. We just kind of traded in that range, 36.90, 36.90 all day, right? And then we had a runaway gap yesterday. This is your open again, all the way to the high on the open. And that high in the open, 37.75 was then proceeded to sell off all the way to 36.90. And then we had again, middle of the day, they decided to kick save it back to almost the high of yesterday's by the time we were trading Asian open yesterday. And then since then, it's just been straight down again. And we're back into this area here. If this 36.70 level can't hold, and again, we just got down to 36.76. If that can't hold, there's nothing but below to go test that low again. So this is not a pretty looking chart to me. I don't know how you view it, but this is not a very healthy. When you look at the mechanics of how this market has got to this high, up 200 points, again, that was a 200-point move, which is huge. I mean, that's a 5% move plus. And now we're just sitting right at the precipice again, where we were on Monday. You know, this is basically the low, the low of the day on Monday at 8 o'clock in the morning. If that goes here at 36.70, you're back to the lows of the week. And that's why I bring this up, because those were the lows basically of the week, and we're all the way back to them here. And it hasn't taken much time to get here.
Right on. Dangerous markets, Matt. I want to share one trade that I've been talking about. Yes. And that is the hog calendar spread. And I got another addendum to this. This is the DEES-FEB calendar spread. We've talked about this spread a couple of different times whenever it got up above $2, that you need to be short DEES, long FEB. And we've had a couple good runs with this spread. It did it again. It got sub $1 here, DEES under FEB. And I loved this area to put it on, anywhere between $1 and 50 cents. But the other thing I want to add to this is kind of like it's a 4-leg butterfly, because I think that the next sequence of April to June or April to July is equally as interesting for me. And so you'd be long DEES, short DEES, long FEB, long April, short June, and that's this side of it. This is the April, June, and you can see the April, June spent a lot of its time somewhere between $8.50 and $7. It pushed all the way out to $12. We got slope and momentum in our direction on this one in particular. So I really like this butterfly. Short DEES, long FEB, long April, short June or July. Pick either one of those summer months that you would like, and butterfly this. And then, we'll head to the grill and butterfly some pork chops this summer on the profits from that hog calendar spread.
I like it. I like it a lot.
All right, man. Anything else? Lee, anything from the peanut gallery? Lee's gone quiet. He's gone quiet in the production booth.
Well, so we got the Yankees, Astros, two teams most of the nation hates. So unless you live in Houston or unless you live in New York, I'll take Verlander just because he's the only guy I really know in Houston. But I'll root for the Astros just because I hate the Yankees, and I'm rooting for the Padres, and I'm down 1-0. So the one hit's not going to get it done for the Padres. They're going to have to find some offense against some tough pitching apparently out of Philly. And Philly is looking to be the recession bringer. So be careful. The Phillies are Kramer's team, so just be careful.
Oh. All right, Matt. Thank you so much. Thank you, Lee, for joining us. Please join us at marketbubbles.io.
So what do you, what's going to happen? The CDC thing, so you can vote now with only having tested on 8 mice. You can make a vaccine that the parents have to give their kids, even though they've only tested it on. Yeah, I'll give you 8 more mice if you want.
Well, I'll give you of mice and men, because I mean, I think that's more important here. I mean, that's where we're at. This is of mice and men.
Right.
And there's some challenge. I mean, how do you put those two things together? The Moderna CEO says it's only for plus 50 people that are at high risk. You put the fact that pretty much no other country in the world is recommending these things for children.
Right.
And then the CDC is going to put it as part of the vaccine schedule. So it's free for everyone.
Free.
I don't know, man.
Right.
And a little bit about it makes it harder for the litigation to proceed if it makes that schedule. I don't know. We need a November to remember here, or we're going to have the winds of November come early, and the Edmund Fitzgerald as the U.S. is a wreck. Anyway, Matt, that's what we got. Join us at marketfellas.io. Please go to amazon.com and buy some shrimp mojo from Manja TV. Spice up your life. That's what we got. We'll be back again tomorrow for another segment of Market Vitals. Thank you, Matt.
Thank you, Bob.